Welcome to Kuwaiti Dinar Analysts, the channel where we explain currencies, oil economies, and financial systems using facts, not hype. Digital currencies are no longer a concept for the future. They are here now. China is testing one. Europe is studying one. Even the United States is debating one. This raises a serious question for our region. Could Kuwait ever switch to a digital dinar? And if it did, what would that actually mean for the economy, the currency, and for you and me? Let's start with the basics. What is a digital currency, really? When most people hear that term, they immediately think of cryptocurrencies like Bitcoin. But a digital dinar would be completely different. It would be a central bank digital currency, or a CBDC. What does that mean? First, it would be issued directly by the Central Bank of Kuwait. Second, it would be fully backed by the state, just like the cash in your wallet. And third, one digital dinar would always be equal in value to one physical dinar. A CBDC isn't designed to replace trust in the system. It's designed to modernize how payments work within that trusted system. The real question is, would a digital dinar add significant value without introducing unacceptable risk? So, why are so many countries exploring these digital currencies? Governments see them as a way to improve payment efficiency, reduce the high costs of handling physical cash, increase financial transparency, and strengthen their control over monetary policy. For some nations, CBDCs are a solution to very urgent problems. Now, to be clear, this is an economic analysis. It's not a prediction, and it's definitely not financial advice. A digital currency can help fix those issues. But here's the key point. Kuwait doesn't really face most of these problems. And that completely changes the motivation behind considering a digital dinar. Think about countries with weak banking systems, high levels of corruption, or large populations that don't have access to financial services. The banking system is stable and modern. Financial inclusion is very high, meaning most people already have access to bank accounts and digital payments. And transaction friction is low. It's already easy to move money around. In short, the dinar works extremely well as it is. This is a critical point because countries usually adopt radical new financial technologies out of necessity, not just curiosity. For Kuwait, the question isn't, do we need this right now? Let's look at Kuwait's current financial strength. Kuwait already has an incredibly strong and trusted currency. So let's imagine Kuwait did introduce a digital dinar. What would be the potential benefits? For one, government payments, like salaries and social benefits, could become even faster. Cross-border transactions could become more efficient. It might also reduce the economy's reliance on physical cash, which has costs associated with printing, storing, and securing it. Payment security could also be improved through new technologies. For the large expat community, this could mean faster remittances sent back home, possibly with lower transaction fees. And for the government, a digital currency could provide better real-time financial data, helping to create stronger compliance systems and a more informed economic policy. But benefits alone are never the full story. This is where a country like Kuwait becomes extremely cautious. The risks of launching a digital currency are significant, and they have to be taken seriously. The biggest risk is cybersecurity. A digital currency system would be a prime target for hackers. A successful attack could be catastrophic. And there are privacy concerns. How much financial data would the government be able to see? Where is the line between transparency and surveillance? Another major risk is the impact on commercial banks. If everyone could hold their money directly with the central bank, what would that do to the traditional banking sector? And perhaps the most important risk of all is the loss of public confidence if the system is poorly implemented or fails. A strong, stable currency, like the dinar, is a national asset. Its credibility is paramount. For Kuwait, that credibility is a form of national capital. Therefore, the country's tolerance for risk when it comes to its currency is, by design, very low. So, If Kuwait ever did decide to move forward, how would a digital dinar likely be designed? It would almost certainly run in parallel with physical cash. It would be optional, not forced upon people. You would still be able to use your notes and coins. It would be tightly regulated, and most importantly, fully backed by the country's reserves. There would be no sudden replacement of cash. There would be no uncontrolled, anonymous access. And it would not be a speculative asset. The number one priority would be stability, with innovation coming in a distant second. Now, you might see some countries pushing aggressively for digital currencies, and wonder why Kuwait wouldn't do the same. The answer lies in their different circumstances. Some nations are using CBDCs to fight runaway inflation, to stop capital from fleeing the country, or to build financial trust where none exists. Kuwait does not share these problems. Its situation is one of strength. So Kuwait's approach would be to adopt a new system slowly, carefully, and only if and when global standards mature. Security can be absolutely proven, and the advantages clearly outweigh the risks. This isn't hesitation. It is strategic patience. This brings us to our final answer. Will Kuwait switch to a digital dinar? The answer is, possibly, but not with any urgency. Kuwait doesn't need to fix a broken system. It would only consider upgrading a strong one. If a digital dinar ever comes, the move would be gradual and optional, with stability as the guiding principle. The physical dinar would not disappear overnight, and it would likely never disappear completely. At the end of the day, digital currencies are tools, not revolutions. For a country like Kuwait, the question isn't really about adopting new technology. It's about preserving trust, stability, and discipline. And those are the very qualities that already define the Kuwaiti dinar today. If you value calm, fact-based economic analysis, subscribe to Kuwaiti Dinar Analysts. The future of money belongs to the countries that move carefully, not just quickly. Thanks for watching.